Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Steve Penny, the Silver Chartist. Steve, thank you so much for joining us today.
You bet, Elijah. Thank you so much for inviting me back on. These are always enjoyable and look forward to today's talk.
Definitely. And it's a perfect time for a live stream because we have a lot of things going on today. And I really wanted to cover this as these things are going on. So it's great to have you on today. What really made gold and silver jump today, it looks like the CPI number came out 6.2%. That's the highest inflation we've seen in 30 years. Your perspective on the news today and how the markets reacted?
Well, the second part of that question is what I think is most important. I tend to pay more attention to the market's reaction to news than the actual news itself. So I've got some thoughts on that. But as far as the inflation numbers, it's no surprise. If I'm surprised about anything, it's that they're willing to show such a high number, because we know that the number is actually even higher than that. And you could make a compelling case that the inflation we're seeing right now is the highest in our nation's history on an official basis, or at least going back, several decades, even past the 70s. Because back when they reported double-digit inflation in the 70s, the numbers were much more accurate. They used generally accepted accounting procedures. Now, they use hedonics and all of these other metrics to suppress that actual number. So even that 6.2% or 6.8% is much lower than reality.
How the markets reacted then. I mean, we saw right around the 8 o'clock to 9 o'clock Eastern time, we saw gold and silver just jump like never before, right? So why do you think they jumped at that time, and how do we analyze that? Were there any key resistance points broken?
There certainly was. And how we analyze that is we know that the price we're looking at is the price set in the paper markets. I think most of your listeners know that. And it's based on supply and demand of paper contracts that can be issued at will by these big banks. And we see these banks shorting into price rallies. Now, that's not, I don't want to say it's like some imminent sell signal, but it's not what we want to see. We want to see these bankers letting it go, but instead they're shorting into the price rallies. And that's reflected in the increasingly, we're not quite bearish yet, but it's reflected in the commitment of traders report. And on gold, the key level to watch was 1837. If we close the week above 1837, that's going to be the first higher high that we've seen in quite some time. And the technical trading algorithms that really drive these markets, they notice things like that, higher highs. That puts them into a buy the dip mentality as opposed to a sell the rally mentality. So we did close just above that 1837 level on gold, but we really want to close the week above there. If we can close the week above 1837, that is going to be key. Otherwise, I would look for a back test of that 200-day moving average.
Now, we did see gold and silver consolidate a bit after that spike up. Mm-hmm. What is that concerning at all, or is that kind of just healthy market movement?
I think it's a little bit of both. What's concerning is that, that we're right near this key resistance level in gold. In silver, we almost came up to the 200-day moving average as well. So I guess the concern isn't so much that there was a little bit of profit taking, but more that, it's obvious that based on the volume. Today's volume in silver was the highest buying volume we've seen going back, I think since the silver squeeze on February 1st. So this is massive volume. And to me, this has the fingerprints of the big banks shorting into this rally. That's the concern for me. Short term.
That's very interesting. And do you see that will continue then, or will this buying pressure really overwhelm that?
Well, the answer is yes, the buying pressure is going to overwhelm it. I am highly confident in that. And that's where I put my own personal money. I think silver and gold are going much, much higher. The question is, over the next intermediate term here, over the next month or two, are we going to see some more backing and filling, or are we off to the races right here, right now? And I think how we close the week right here and then the month is going to be the first big indicator on how, the next quarter unravels.
And with respect to the other metals as well, we were just talking before we went live about platinum. And this is something that I'm invested in, actually. And I think the bullish fundamentals for platinum are very, very convincing. And it looks like on the chart, at least in your perspective, if you want to share that it seems like platinum might be breaking out at the moment.
Yeah, it is. Platinum really has my attention here. I don't want to get too you don't want to let your emotions get carried away, but the more digging I'm doing into platinum, the more bullish I become. And just confirm, you can see my chart here.
Yep, perfect.
And I think this is a good segue into the platinum chart. But first of all, just looking at a chart of commodities versus the S&P 500 going back to 1980 here, we see that commodities in general have really, I don't want to say never, but going back about 100 years, have never been so undervalued relative to general equities. And you can see we hit that low back in March of 2020, and we're just starting to curl back up off of this low. So commodities in general are extremely, extremely undervalued relative to stocks. So that causes me to drill down and say, all right, well, if commodities are undervalued, what are the most undervalued commodities? And I think your listeners know that, my focus anyway is silver, uranium, and gold. But platinum is something I've been watching for some time. And the more I dig into this, it appears that the platinum is poised to start outperforming other commodities, to include possibly even the precious metals. Now, when you look at a platinum versus silver chart here, this was really stunning to me. This goes back to 2003, and you can see just how undervalued platinum is, even relative to silver. And we're approaching the apex of this triangle pattern right here. And these are monthly candles, by the way. So in the next month or two, I really expect this pattern to resolve one way or the other. And if it resolves higher, which is my baseline expectation, I'm looking for platinum to begin to outperform almost all commodities, possibly even silver. Now, that doesn't mean like, hey, I'm switching over to platinum as my main investment thesis. No, because platinum is much more risky in my opinion, but it does merit a position in my portfolio. I think silver presents the best risk reward ratio over the next few years, but platinum, I want to have a little bit more exposure to that for sure.
And you mentioned how platinum is more risky. Why is that, in your opinion?
Because so much of the demand is driven by industrial uses. Investment demand rate makes up about 15 to 20% of the platinum market. The rest is in automotive and industrial and jewelry.
And when it comes to, also, we saw in the stock market a little bit of a sell-off there, that actually, if you wanted to talk about how you were actually warning about this for your subscribers, but what is your perspective on what is happening in the stock market right now?
Yeah, I think it's no secret, especially to your listeners, that stocks are overvalued by any fundamental metric, and they're also overvalued technically. They're technically stretched. So if you guys can see right here, here's a daily chart. And you can see this very clear resistance line. This is the S&P 500, by the way. Every time we've tapped this, we've had a little sell-off. Now we've turned around and rallied back again. So just this past week it was Friday, we tapped this resistance line again. And we also have this little bearish rising wedge pattern. And the way to trade that is once you break below that lower rail of that wedge pattern, traders would go short. So, I'm short the S&P 500 now. Now, this is a short-term trade. I mean, it's moving in our direction now. But, the way for a trader to play that is you put a stop loss above that. So if you're wrong, you're only out for a small loss. But, I think, general equities are well overvalued. And, we're looking to, I personally trade that over the short term.
And I know if you look at the PE ratios, they're very high. What in particular are you looking at to say that the stock market is overvalued?
On a fundamental basis?
Right.
I mean, you could almost any metric you want to use is going to show historical overvaluation for the general equities as a whole. I mean, obviously Tesla is the poster child for that, but you've got stocks that have no earnings that are trading at these exorbitant multiples. It's a bubble. Now, that doesn't mean bubbles can usually go higher than many people think. So I'm reluctant to call the ultimate top here in the stock market, but there are opportunities to short it for just short-term trades. And that's what I do.
And also with respect to the dollar, what is your perspective on actually the rally we've been seeing recently? It's interesting because we're seeing high inflation, which seems like that would be bearish for the dollar. Your perspective on that?
Yeah, the dollar from a technical perspective, it's breaking out today, or actually the breakout started yesterday. The 94.50 area is what we've been watching. And I think it has a potential measured move up to 96.50. My thinking had been that if that happened, we would see a sell-off in the metals. Well, we're seeing the dollar and the metals rally in unison today. And that just shows, there's not always a perfect inverse correlation between the dollar and metals. And I think probably some of the reason we're seeing that is, we've talked about this before, but the dollar index is just a measure against other fiat currencies. And, the Bank of England the other day, for example, decided not to taper when everyone thought they were going to. So other currencies can fall. And if they're falling less fast than the dollar, it gives the appearance of dollar strength. But really, all of these fiat currencies are on a downward trajectory in terms of purchasing power.
And when it comes back to the precious metals, if we can get back to that, your perspective, kind of what are the key levels we should be looking at if you wanted to remind our viewers? And for our new viewers just joining right now, we're with Steve Penny from the Silver Chartist. So yeah, Steve, if you could kind of remind our viewers, as we're looking at precious metals breakout, what are some of the key levels, again, we should really be keeping a key eye on as we move forward?
Yep. I'll give you one number in gold, 1837. You want to see a weekly close above 1837. If we don't get that, then we could see a little bit more backing and filling. I'm not saying we go back all the way down to the recent lows of like 1675, but I wouldn't be surprised if we backtest the 200-day moving average if we fail to close above 1837. You can see that on this chart right here. Now, what's significant about this gold chart as well is you can see this very clear and well-defined downtrend channel that we're just breaking above this week. And then you can also see this 1837 level that we're breaking out above. So we're at a key inflection point here. We're starting to break out, and we need a weekly close above this level to confirm.
And as for silver, what are the key levels we should be keeping an eye on?
Absolutely. Yeah, and silver, you can see right here is the 200-day moving average. That is currently just above $25, $25.45. And we didn't quite get there today, but that 200-day moving average is really so important because I'm pretty sure it's the biggest input to these institutional trading algorithms. And when price is trading above a rising 200-day moving average, those algorithms tend to be in a buy the dip mode. So if we can get back above that 200-day moving average, that would be pretty significant. You also see these two clear channels here. You got the longer term, slightly upsloping green channel here, and then this downtrend channel. I labeled this the silver squeeze downtrend channel because it started on February 1st. So, you've got support at the lower rail. And then once we get above the upper rail of this red channel here, I think we can say the lows are very likely in, and we're likely to see higher highs and higher lows going forward. But we've got just a little bit more work to do on the silver chart before we can say that with conviction. And by the way, Elijah, if it's all right with you, I'll mention the commitment of traders report here too while I'm sharing my screen. That's kind of the fly in the ointment from my perspective, especially for gold. It's not like we're at a point where it's at an extreme where a sell-off is imminent, but at the same time, we're not washed out. These bankers are not positioned in such a way that is typical with like a major low. And, that doesn't mean we can't keep going higher, but it's just something I'm watching closely. The bankers are pretty short in gold. And it's rare that they're wrong.
That's very interesting. So essentially, if we were seeing a washout low, we would see the banks less short. Is that what you're saying?
That is exactly right. You stated that much better than I did. We just did in our weekly report. David Brady wrote a couple of weeks ago, eight signals that he's looking for a bottom, a major low. And, he admitted, and I agree, that we don't always get all 8 of these. But you want to get as many as you can. And the more that you see, the more conviction that you can have that the lows are in. And we don't have all of them in place. One thing we are seeing is the price and volume. The chart is breaking out. But the commitment of traders report is one thing. It's kind of a little bit of a fly in the ointment that has me a little bit nervous over the very short term.
And if we do see a downturn and a washout low, then what are some of the levels you're looking for maybe for gold and silver to fall to?
Yeah, so I think of it as like multiple support levels, and I kind of scale in at each. So the first one in gold would be the 200-day moving average. That's right around $1,800. That round $1,800 number is key psychological support anyway. Below there, you've got the recent low of 1720, and then the big support is 1675. I really think that's the low. I would be stunned if we go below 1675. Of course, anything is possible. But if we did pull back to 1675 again, I would fully expect that to hold. And that's where I would look to add aggressively to my personal positions.
Definitely. And I guess with respect to kind of continuing to accumulate metals, as we're seeing this bounce in the metals, is this a good time possibly to step in again, or maybe wait for a pullback?
I guess it depends on your strategy. There's for me personally, with physical metal, I just look at it as exchanging currency for money. And I just do it every month on an automated basis. I don't even think about it. I don't care what the price is. I'm just trading currency for metal every month. So I don't try and time it. But if you're looking to trade, I'd either look for a breakout, a weekly close above that 1837 in gold, or pull back to the 200-day moving average. That's one of my favorite places to accumulate either a stock or the metal, is on a pullback to a rising 200-day moving average. And that in gold, that would be about $1,800.
Now, it looks like for silver, we saw a month back or so at the end of September, we saw that $21.50 level. Do you see that could be revisited?
I think it's unlikely, but it's possible. I'm keeping my little bit of remaining cash in my mining stock portfolio is in the event that we do back test the recent lows. If that happens, that's where I would really back up the truck personally.
And I think it's so key, as we always do on these podcasts, when it's live, it's really good to keep up with the daily news, but at the same time, it's important to take a step back and look at the big picture.
Yes.
For those just joining us, once again, we're with Steve Penny of the Silver Chartist. And if you wanted to kind of give us an overview again of that big picture view for gold, but also silver, the name of your website, right? Silver Chartist. Why you are so bullish on the precious metals, especially silver right now.
Sure. And if it's okay with you, I'll start super, super macro. And we've all heard this before, but it's good to remind ourselves of these things, of where we are in the big picture story here. And we're in a place right now where major governments around the world, especially the United States, are in a situation where their debt and the unfunded contingent liabilities are mathematically impossible to repay in today's dollars. It just cannot happen. There's a 4-letter word for why that's impossible, and that 4-letter word is math. So they have two choices. They can default honestly, or they can inflate away. And history suggests that 100% of the time, these governments choose to inflate away the debt. And throughout history, silver and gold have been the prime beneficiary of this exact environment that we're in right now. Yeah, the price action over the past year has been frustrating, is putting it lightly. I mean, it's just been downright, it's been terrible. But if history is any guide, that's not going to last. Silver and gold will do a full accounting for the expansion of debt-based fiat currency, just like they always have. So with that perspective in mind, the next month or two really is meaningless unless you're trading, or if you're looking to scale in and build a mining stock portfolio. If you've got a certain amount of capital and you're like, hey, I want to put this to work to buy these mining stocks, well, then you want to have a strategy to scale in with some precision. But if you're just looking to scale into physical metal, keeping that big picture is key. Hopefully that wasn't too much of a long-winded answer.
No, I think that's fantastic. And as you mentioned, the amount of debt in the system, the amount of money or currency that's being created just is so bullish for precious metals right now. And it seems like what we're seeing coming full circle is finally, we've been speaking about this for so long, but finally it seems like what we've been talking about for so long is coming to fruition. We're seeing the money creation, the currency creation that's happening actually flowing into impacting prices, right? So the monetary inflation turning into price inflation. Any other thoughts on that and where that might be heading in the future?
Kind of, and hopefully this is related. I'm reminded as you're speaking about the last bull market, two bull markets ago, I guess, depending on how you measure it, but the 70s bull market. There was a grueling pullback in 1978 where silver fell by, if I remember, about half. And then that last 18 months or so is when it shot up several 100%. So there's a saying that 90% of the move comes in the last 10% of the time. And I feel like where we are in this story, in this current bull market, could be right about 1978. Where when this turns, I think it's going to turn aggressively and we're going to see a really sharp move. But fine tuning and really nailing where that turn happens, it's really difficult, but I am confident it's coming. And I think it's coming sooner rather than later. And we'll see if this current bounce right here is the turn where the trend has changed.
Definitely. It'll be very interesting to continue to report on that and also see it where inflation goes. 6.2% right now is the official number, which is really high. It might be higher than that, depending on how you calculate it. But Steve Penny, we really appreciate your time today. If people are looking to sign up for your newsletter, they can go to silverchartistliberty.com, which is our affiliate link. By going to that, you'll be getting Steve's great content and also supporting this channel. Did you want to share a bit about your newsletter, Steve?
Sure. And I'll mention that Silver Charge Liberty link. That's to get into the free letter. And then there is the option to upgrade to a premium version. But our goal is always just to provide a ton of value for free. And if you choose to upgrade, there's a low ticket option as well. And with that premium version, what you get is a fully transparent over the shoulder service with real-time alerts. I share exactly what I'm doing in my personal portfolio, trying to explain why. And hopefully that helps our members to make better decisions with their own portfolio.
All right, Steve, any last thoughts before we let you go?
No, just appreciate connecting with you, connecting with your audience. Thanks so much for inviting me.
Fantastic. silverchartisliberty.com is the website. Once again, everyone, thank you so much for joining us on this live stream. Have a great weekend. All right, great.